Ladies and gentlemen, we are back. Welcome to another video. Crack open a cold one. I don't know if it's that exciting, but I actually made a good trade yesterday, so I'm happy about it, and I thought I would talk about it and what I'm going to actually do to make it even better. And before we get started, if you like this kind of content, consider subscribing. I'm at 1,599 subscribers I saw, so if you want to be the 1,600th, go ahead and do it. Appreciate ya. Let's hop into it. What am I going to do potentially tomorrow? I'm kind of giving it away right now, but let's look at my put that I sold on NVIDIA. And I talked about this yesterday because NVIDIA went down horrendously. And that's what I love seeing. Unfortunately, it's back way too quick. That's what I love seeing is red days when you're selling puts. You can make money off of people's fears, whether they're rational or irrational. I think it was a mix of both yesterday. And you can do this with really good companies like NVIDIA. And I sold this $116 put, which when I was recording yesterday was at about $400 in worth, and now it's at $34. So it goes to show what one day can do when a stock bounces back. Of course, it doesn't always have to bounce back, so don't always rely on it. It can go down even further. That's why I'm saying I actually made a decent trade today, because that's not usually the case all the time. So overall, I made $146 in premium from selling this put. If I bought to close today, I would walk away with $112. But that's not what I plan to do. What I actually want to do is a technique that I like to do when I sell a put and that stock goes up a pretty significant difference between the strike price of the put I sold and its current price, is what I call rolling up. So a lot of times, if the price of the stock gets closer to the strike price or actually goes in the money, one of the techniques you can do is rolling it out and rolling it farther down in strike price. Well, this is the exact opposite. Instead, I'm going to have the same expiration date, but the strike price is going to be even higher. And the difference between this put and the new put that I go to sell, I will pocket the difference. And if you don't know what the heck I'm talking about and you want to learn more about selling options, I created this new course. For a limited time, it's 25% off. There'll be info in the description, and it teaches you everything you need to know for beginners: what a put is, what selling a call is, the wheel strategy, delta, buying to close, rolling an option, and many examples. It's an hour. It's packed full of information that I share from me learning doing this. And it's a method I use so far this month, by the way. $2,900 in premium I've made from selling option, and it's going to hopefully be more, because if I go to roll this position, I do what I was talking about, which is rolling it up. What I'm essentially doing is I'm picking the same expiration day, so this Friday, and I'm getting closer to the new price. So it went up to $127 a share, and honestly, one that I find enticing is this $124 put. It has a delta of 0.26 and a 77% chance of expiring out of the money. If I wanted to be a little more ballsy, maybe this 125, closer to a 0.3 delta, which is usually the max that I sell puts at. But this one, if I were to roll it to 125, I would make an extra $134 in premium. And this $134 would instantly go to my account. I could do whatever I want with it. I could buy extra shares of SoFi or the SPY or whatever it is, maybe transfer it to my bank account, doesn't matter. So this is what I'm actually going to look at tomorrow. We'll see what the price of NVIDIA actually looks like tomorrow, because if it drops back down to like 120, it's going to be a different story. But if it stays at these levels, I'm going to look at rolling it up. And like always, I'll keep you guys posted, because I document everything on here and I don't hide anything that I do, the wins and the losses. So stay tuned. I hope to see you in a future video, and take care.